Hello guys, my name is Alex and today we're going to talk about money management. So this is our master class number 3, I think, for this subject. Okay, so today's topic will be how much we can make from the minimum deposit from 10 bucks. And I've prepared a small presentation for you so we can compare some stuff, some information and have some understanding, I believe, about this subject. So after this, I think this will take maybe 10 or 15 minutes. We will go back. I will go back here to the charts and answer to a question. So let's start. So how much we can make from $10 today's topic? Before we start, so there is a risk disclaimer about trading operation which are measured with a high risk degree and can cause partly or complete loss of funds. And when I'm talking about this, like on every stream and on every masterclass, I'm talking about like 3 subjects of trading. So this is risk and money management, today's topic, psychology of trading, and trading strategies itself. So must be um, they must be um, like well prepared for every trader, and they must be in such configuration that it's good for you personally as a trader. Only in this case there will be no like damages in your trading. Okay, so today's topic is risk and money management, and before we start, I want to show you and share some information about like profitability, like annual profitability of different fields of investment. So, for instance, we want to put our money in the bank, and of course, this is depend on the country, on the like banking system. And for instance, in some countries, it can be like 6 or 7% annual. Yeah, in some countries it's lower, in some countries it's more. So this is some kind of average numbers in every table over here. So something about, yeah, maybe it will be like 2 or 3% in your country, or maybe it will be 10% in your country. But this is called non-risk profitability. Yeah, because the um the probability that your investment will be gone in a bank deposit is like nearly close to zero. Yeah, and in most countries it's like it's have a governmental um, like laws, yeah, about this, something like this. So if you want to invest in the bonds, for instance, it can create maybe 10 or maybe 11% annual income from these operations. If you're a stock investor, this, yeah, deviates from your strategy, and so on and so on. So all these numbers are like very, very um, average, you know. So it can be much bigger, it can be much less, depending on like different factors. But maybe you can make, I don't know, 20 or 30%. I think maybe it's more reasonable to talk about maybe 15%, or like better than the benchmark, better than the S&P 500, something like this. So, anyways, so this is just a scale of percentages over here. Something about 10, 15, maybe 30% tops. Yeah. And if we are investing like $10 into these fields somehow, um, because there may be minimum deposits in all of these fields of investments, more than $10, but the income will be like this, maybe less, or maybe $1 or $2 annual, yeah, per year. So, for instance, we want to earn $300 from our $10 investments, and we're talking about like digital options trading in this matter. So The question is, what will be the annual profitability in order to make this $300 from 10? So we can calculate it easily in this example. So the profitability, like for 1 month, will be 300 divided by 10. It will be like 30, or oh, I think this is like incorrect. I forget one zero. It will be 3,000%. Yeah, because like 1 equal to 100%. Yeah, so 30, it will be 30 and plus 2 zeros. Yeah, 3,000% per month we need to make, yeah, in order to create profit like $300 from 10. So it's quite a lot. And in this case, so this will be equal to 36,000% annually. Yeah, so if we will multiply this by 12 months, so this will give us 36,000%. So you can see that this is like very big numbers. Comparing to like 6 or 10%, we can like gain another field of investment. Um, and so this is all about the risk. And I've talked about this earlier in the previous streams. So we do have a risk on our operations, and we do have a profit on our operation. And if we risk more, we gain more profit. So if we want to lower our risks, we will profit less. Yeah, talking about these numbers, so the risks are like low over here. That's why we earn not so much. Yeah. So if we want to make some great profit, this means that we need to increase our risk the same time with the same amount. Yeah. So the risk will be increased in, I don't know, 33,600 times. Yeah. So the risk of making this annually, I think this is like too much. Um, so let's talk about some more like realistic numbers. And this will create some like approximate calculations anyhow, because you know. But for example, we will calculate it that we're going to trade not more than 5% of the deposit. We've talked about this in the previous master classes. But on the platform, so there is a minimum trade amount, minimum trade sum. It's like $1. Actually, it's bigger than a 5% from 10. It's like 10%. It's like way too much from the beginning, but we do have this limitation. After this, let's consider that we're trading like super good. So we are a professional trader, and so we have a loss and like profit and loss ratio about like 3 to 1. So we have 3 pluses and 1 minus, yeah, in common. Um, for example, we're like creating um, three trades per day by our trading strategy, yeah, because if we're like making more signals over here, so the ratio will be less, something like this. So these are the assumptions, yeah, because we're talking about some random situation, but nevertheless, this number will give us $2.46 per day of income, yeah, and the trader will lose one of his trades, and it will give us like $1 of loss. The clean profit, difference between this number will be $1.46 per day. Yeah, at this condition, it's like almost perfect conditions. Yeah, yeah. In this case, we are calculating all of this. So we're trading with a fixed sum. I forget to put it in the presentation. So we don't use any other money systems. Only fixed some $1 trade like every day. Every trade is like $1. In this case, this will give us like $30 per month and about $350 annual profit. With all these assumptions. Yeah, assumption number one. So we are trading like $1 every time. We don't increase or decrease this amount. Assumption number two, the profit and loss ratio is like always 3 to 1, like every day. And we are trading every day, like making 3 trades. Of course, we can like increase or decrease some of these numbers and create some other calculation. So this is like very basic calculation, but it it can show you um, the scale of profits. Yeah, so in this case, you can see that we're making $300, maybe not per 12 months, but maybe for 9 months, something like this, from 10, if we're trading super good. So this is maybe the main assumption that our trader is a professional. Okay, so yeah, I've talked about this. This is very approximate, but in the calculated maybe for the digital options trading. Nevertheless, it shows how much scale of money you can create from $10. And in my humble opinion, $10, this minimum amount is just a sum. So for instance, you want to, I don't know, you want to buy a new car and you go to the dealer and you have a test drive or something like this. You don't want to pay for the new car if you don't test this. For me personally, like the minimum deposit in every broker is like a test sum, so which give me access to the broker, and I can, I don't know, see some pluses and minuses of the system and consider working or not working with it. So this is my humble opinion about this minimum sums, because it's nearly impossible to work with this sum efficiently. Even for me, it will be very hard. Okay, so this is it. So I'm going back to the presentation. Sorry, for the chart from the presentation. And do you have any kind of questions? Uh, If you have only $30 to invest and you lose all 30, then don't have any other. Um, I don't understand. You're talking about like one trade, or you're talking about like a serial of trades. Um, so if you, for instance, if you have any $30, this is all of your deposit, and you have all of this like 100% in one trade. So this equal to like risk of 100%. This can give you like a lot of profit. You almost double your deposit at once, but the risk is too much over here. So that's why we like giving the recommendation. So this is like top 2 or 5% tops in the moment in the market you're risking. So maybe this is like 2 or 5 trades for 1% simultaneously. Um, that's good. Emotional greed, yeah. So actually, greed is and when you're scared or you're getting greedy, it's it's remember I've talked about this in the beginning. So we do have risk and money management. We do have trading strategy, and we do have a psychology of trading. Yeah, so this is the psychological moment. And this psychological moment it's affecting risk and money management. It's affecting trading strategies that you are choosing, and it's have its own issues um, you need to fight with maybe, yeah, in order to succeed. Because if you will be too greedy, so I believe that greed itself, um, it can create some kind of motivational vector. So you want to earn some money, and I think this is good in our society. So, or maybe not. I don't. Uh, I don't know. So this can create some kind of emotional vector of succeeding at something. But if the greed is overcoming you, if it's controlling you, if any psychological moment is controlling you, if you are um, if you are being controlled by something, meaning that you are not doing something by yourself, you're doing something under the control, and this is the psychological issues you need to fight with in order to trade good, or in order to do some uh, other stuff good, because it's not considering trading, it's not considering greed. If something is occupying you and making you doing something, if it's ruling you, so it's not you who is making choice, it's a greed or something else that is making choice at this time. This is maybe more about, I don't know, uh, psychology and philosophy. Maybe this is philosophical question, something like this, but this is my humble opinion too. Okay, so yeah, per trade, that's good. Control your emotions. Try to try to start to do this. Uh, Best strategy for, so there is no best strategy at all. So this all is a matter of your comprehension. This is a matter of your psychology. Some traders want to risk more, and they see that it's reasonable to risk more at some situations. Some traders don't see this opportunity, and this is only the matter of comprehension. Um, Maybe there is a gambling for some traders. Maybe it is an investment for some traders. So this is like considering your comprehension. If you want to do this, so you can create a gambling game out of any game if you want to do this. Um, um, okay. Uh, Money management principle. So there is no like good or best money management principle in common, but I believe that you need to make and create some limitations. Yes, your personal limitations. For instance, you can create it like, for instance, so this is your deposit, and um, it's like your one trading day, and you can create a limitation plus, I don't know, plus 5% and -5% or some other numbers as you wish. Um, if you achieve this like goal, you end this trading day, or if you like lose something that you've calculated before, you end this trading day, something like this. In this case, this limitation can help you. So I think the best money management principle is a limitation. And the amount of this limitation is only a psychological moment. Yeah, because we all see the world and the trading differently. How much trades? The same amount, how much trades, which assets, which trading strategies, which I don't know, indicators or not to use indicators. Some traders use only one simple moving average and succeed. Some use very big trading systems, and um, this is all the matter of your comprehension. Um, Risk-free trades. So the risk-free trades, I think this is a matter of like VIP clients, and I don't want to talk about this because maybe the rules have changed a little bit. But yeah, we do have this instrument, but it's you don't need to trade without a risk. It's impossible to trade without a risk or without a losses. It's just a matter of making more pluses versus minuses, and the difference, this delta, is your profit. So there is no like perfect trade, there is no perfect timing, there is no perfect anything. You just need to make this ratio more to your side. So this is the main principle of trading at this moment. Sorry, I don't have any kind of these messengers to share. Uh, 2 months now, I've been trading. Uh, yeah, 60% is more than enough actually. If you will do 60% of trades, we've talked about this um, in the I don't maybe previous week or maybe a week before. We've talked about this different money management systems. I've talked about fixed sum, martingale, parallel system, and I've showed you like basically that 60% is more than enough to trade with a fixed sum. So if you will make 60% of positive trades, you can use fixed sum, for instance, 1%, or like in my example, it was $1, remember? So we were just using the fixed sum, and this will create you profit. So 6 out of 10 positive trades, and you can use this fixed sum, and this delta will be positive. It will be more than zero. The more you gain pluses, the more will be this delta, this difference. Uh, Masterclass strategy using candlestick patterns. We don't have yet, but maybe we'll do, maybe next year, I believe. Um, Strategy using candlestick patterns. Um, I need to think about this. Maybe next year. So all of our strategies are more, um, patterns and like graphical analysis. It's um, have more psychological moments that's maybe needed because some traders like see head and shoulders here, some traders don't see. Yeah, and it's sometimes it's hard to understand whether it's a pattern on the chart or not, if it's like complex pattern. But I personally recommend you to use levels of support and resistance, maybe trend lines, channels, something like basic elements of graphic. It's very, very, very interesting. I'm using them by myself. OLYMP TRADE have digital options? Yes, yes, it does. It does have digital options. Trend is your friend, yeah. For some traders, for some traders like to trade against the trend, and they're not wrong, you know. But basically, yeah, because I think maybe it's more reasonable to trade with the money flow, with the trend, not against it. But at some point it will reverse, so it's it have like two-side logic over here. Um, area line candlestick. So this is the types of the chart actually. Um, Anyways, they represent the same information. So we do have a linear chart, and we do have a candlesticks, and we do have a bars, and they show you the same data. They all are the same. And this is, I use more like Japanese candlesticks. Some traders use linear chart, some like bars, and at some point it actually doesn't matter. Um, okay, guys, so we go to some other direction from the money management. So if you do have some questions, please examine this channel, and we do have a lot of interesting streams and webinars. And probably if you do have some kind of questions, it was answered at some of these streams or webinars on the platform. So, oh no, not on the platform, on this channel. So please take a look. There is a lot of very interesting information. And if you like, share and plus and do whatever need to be done on the YouTube. Okay, guys, I will end for today. So see you on Thursday. Have a good weekends and have a good holidays. Who's having a holidays? See you in a few days. Bye bye.